Hello, everyone. My name is Varun Jain, and I welcome you all to this very interesting panel discussion on going digital, how D2C e-commerce is set to disrupt the next decade of shopping in India, where we will discuss the key trends in this space, last mile delivery, how to leverage technology, and enabling digital payments. We have a great lineup of speakers with us who will try to let our audience understand how direct to consumer is proving to be a game changer and what the future holds for this model. Please join me in welcoming Siddhant Rana, Market Development Lead, India and South Asia for Shopify, Navjot Kaur, Vice President at Fireside Ventures, Sheikh Mohiddin, Vice President, SMB, Channel and Bank Alliances at Worldline India, Ganesh Balakrishnan, Co-founder and CBO at Flatheads, and Utsav Malhotra, Chief Operating Officer at Noise. Thank you very much for joining us today for this very interesting and insightful panel discussion. Let me start the discussion by asking, by taking the views of all the panelists on the key trends that they see would be forthcoming in 2021 and the rest of this year, going forward in the next year as well. So what are the key trends that you guys see in the D2C e-commerce space? And we'll take a very short view. After that, we'll start with the discussion. So we'll start with Navjot. Navjot, what do you think about the trends?
Thanks, Varun. In D2C trends, Varun, there are, a lot of consumer trends that are coming up. There are two very interesting consumer trends on the what is the consumer trend, which is basically in the better for me area, which is goodness, wellness, better for me, better for the environment. The second one is more on more for me, personalized for me, customized for me. So the two large consumer trends in terms of what is definitely consumers are getting more and more conscious of what they are consuming. It's not just about the end result, but it's also about what goes into the ingredients and the formulations of what they are consuming. Definitely intelligent customers are coming out of this trend, which is why they are preferring better for them, customized for them. So it's no longer about how, like back in the day when we were kids, Bata was one of the large brands, and we all would buy shoes from there, right? And Flatheads and Ganesh would appreciate this. But right now we have that opportunity that we can actually target niche customers and personalize things to them. So the personalization angle or the customization angle is very, very prevalent and very doable now, which could not be done back in the day. And the second one, of course, is the better for me, where customers are more and more intelligent. These two are more on the what are the trends, and there are a lot of trends which are also supporting on the how part. So there are two probably large how trends also which are emerging. One being the tech enabled how, which obviously wasn't there earlier, and which is what is driving D2C e-commerce today. And of course, we have Siddhant from Shopify, so he can tell us more about the tech enablement. And there are so many others, other areas of tech enablement as a trend of how to support the trend. And the second one is social enablement. So again, that these two hows are actually driving the what's and everything coming together. It's becoming very interesting for D2C.
Right. Coming to Ganesh, what would be your, what do you think would be the key trends going ahead?
Thanks, Varun. Thanks for getting me on this panel. So, as Navjot said, just taking on from what she mentioned, this is the decade for D2C brands in India to emerge. I think horizontal marketplaces have rescaled. Vertical marketplaces like Myntra and Nykaa are already there. The next stage is brands to evolve, right? I see it more from a near term, which is right now and the rest of 2021. A little midterm and then more a longer term perspective. From the near term, clearly, given the whole pandemic that has hit, people are a lot more sensitive in terms of price. We see a lot more value for money kind of buying happening. Second, there is a lot more focus towards sustainability, focus towards, as Navjot said, wellness, focus towards comfort. Right, that is something that is clear and evident right now. Last time when the pandemic lockdown lifted and we started seeing lockdowns being removed on a staged basis, there was a huge revenge buying thing that happened, right? And that will come back again. So in the short term, at least in the next 3 months to 5 months, as things start opening up, you will see a lot of revenge buying, especially in the travel sector. And we saw that in the footwear sector for sure, right? June and July last year were our best months. So similarly, you will see that happening now in the short term. In the midterm, clearly there is a shift. There is a step change in online buying. A lot of people who are on the fence on online buying now, because there is no alternative, there is clearly online becoming a regular channel. And once that shift happens, people don't go back, right? It becomes a habit, and people continue to buy online once they understand the experience that it brings and the convenience that it brings. So that step change has definitely happened, and from there it will only grow further, right? So that is very, very encouraging for digital first businesses like us, internet first businesses. On a longer term basis, I think from a D2C brand's perspective, discretionary spending is continuously increasing, and there are platforms that are enabling discovery of new brands as well. Cred being one of the examples there. That trend is going to open up a lot more, right? In terms of maybe a product hunt for brands emerging, right? Maybe a Zomato for brands emerging with reviews and being the spearhead there. There's a lot more in terms of brand discovery that will happen, right? That piece is still emerging right now. In the longer term, I think as there are a lot of niches that brands will take and start growing that to scale, right? Typically, if you look at Indian markets, there is a lot more functional aspect to it, like Bata being the chalta hai, tikta hai wala shoe. Now the niches are there, right? So you talk about work shoes, you talk climate specific monsoon sneakers or summer sneakers. A lot of those lifestyle based niches will start forming and starting to get to scale in the next 4 to 5 years.
So coming to Utsav, what would you suggest? Where do you see this going, and what are the trends that you're looking at?
So Varun, I partially do agree with Navjot and Ganesh that these are largely the tremors that we all in our positions can kind of foresee in the near-term future. We also have to recognize the fact that we are all coming on the mightiest cognitive bias of what the pandemic entailed, and therefore some of these trends kind of emerging. And clearly health and wellness has taken precedence and become an area of focus largely for the masses. Also the fact that people have been holed inside, there is a case for revenge buying, although I think it's more conditioning now, where people have gotten used to the idea of e-commerce has kind of seeped in a lot more, and the pandemic has worked as a catalyst. So people are a lot more predisposed to spending on shopping online. And hence I completely agree with what Ganesh is saying, that this is for the next few foreseeable years the era of brands, really. But in terms of trends, you realize that when you talk about brands, we're all either marketers and involved in building the brands, or listening to the consumers, and therefore the listening to the consumer bit is going to take focus, where whether it's AI enabled decision making or data insights or actually studying trends for product development, a lot of that will take more focus now, where big data will start becoming a large factor for us to start finding niches. I also reckon that hyper-localized content or social commerce are going to be big play areas for the future, and I'm sure Siddhant can kind of shed more light on it in terms of how platforms like Shopify are enabling some of those things. But certainly one of the areas that we reckon growth will come from. Also the fact that with how the whole economy is kind of metamorphosing and people are shopping sitting at home and have gotten comfortable with that, newer payment platforms and means to engage will emerge, some of which we've already started witnessing. So to my mind, that's how I would want to structure those 3 or 4 large trends.
Sure. And Siddharth, you have heard all the three panelists, so they spoke about revenge shopping and uptake in price conscious consumers, well-being products being, lashed up by the consumers in this space. So you agree with them, or what do you think about the situation?
100% Vaibhav, a lot of great insight. Just wanted to sort of zoom out of even direct to consumer. I want to say the next 10 years is going to be about entrepreneurship, right? If you see like retail's history, right? Like you started with these departmental stores where you would have these big brands having like an advantage because they would be willing to spend more. Economies of scale would kick in. Somewhere around 2005, that entire online journey, online stores started disrupting that, but it was still very inaccessible because not everyone knows how to code. So by around 2007, when we started becoming like much more accessible across the world, platforms like Shopify really enabled entrepreneurs to be able to reach consumers with very low investment, being able to like cut out the middleman and reach out to consumers directly. So with that background, what it enables is it enables the best product to be available and enable the best match between consumers and products, right? So I think that's the background of what I see really kicking in and growing. So I feel like the pandemic definitely fast forwarded this trend, and I feel like this next decade is going to be about the best entrepreneurs reaching their consumers, right? Today you're no longer restricted in terms of what is a store. The concept of a store, it can be a website, it can be social media, it can be a portal like Cred. We've launched our own shop app in I don't know if everyone here is aware, but it's basically started off as a logistics app where you could see all the orders that were being delivered, but from there now it's evolving into brand discovery. Similarly, there's always been like Amazon and Flipkart and the likes. So there's so many touch points, right? So I feel it's going to be the decade of entrepreneurship, and the best brands will win.
Yeah. Right. And coming to Sheikh, you agree with Siddharth's point of view, being next decade being about entrepreneurs, and what do you think would be the key takeaways for D2C brands in India?
Yeah. Thank you, Varun. Pleasure to be here. Yes, I agree with Siddharth, and also like Utsav mentioned, I'm personally keen to see how brands are going to handle the tech-led innovations like AI-based decision making, forecasting, and recommendations, vernacular language interfaces, and conversational commerce are going to take D2C e-commerce to the next level of growth. Is what I wanted to watch out for. And then omni-channel strategies, right? So the need of the hour is multi-channel approach, right, on all connected devices. So to give the same experience, for the users in whichever device they get connected with, right? So I think that's going to be a very key thing that's going to happen in the coming years. And then coming to digital payments, it's on the uptick in India ever since this 2016 demonetization happened. Right? And with the post-COVID safety concerns, contactless payments have become the norm everywhere. So I'm looking forward to see how consumers embrace flexible payment options like no-cost EMI or buy now, pay later, right? Subscription payments and so on. Right? So because these kind of payment options will enable people with lower or more uncertain income group to also participate in e-commerce purchases and be part of the growth that happens in e-commerce as a segment.
Right. So Sheikh, we have heard all these panelists, and one thing is certain that everyone is very bullish about D2C e-commerce. It will grow in India. But as a payment service provider, how can you help them, this channel, this model to flourish in the country?
So let me start with this, right? A sale gets fulfilled or completed only when the payment is successful, right? So considering this fact, I think the three fundamental responsibility of a PSP, payment service provider, is basically to provide a stable platform, ensuring high success ratio, that's the platform performance, and being compliant with regulatory guidelines, right? So these are only three basic fundamental responsibilities so that we can help the overall ecosystem with this kind of scale that we are experiencing right now, right? So what I meant by stable platform is simple: a reliable payments platform with 100% uptime, right? And when we come to ensuring high success ratio in digital payments, as we all know, market expectation is 100% success ratio when it comes to digital payments, right? But considering the ecosystem and the number of enablers involved in a payment flow, 100% success ratio is a little difficult to achieve. But as a PAPG, right, a payment gateway, we must make sure at least we achieve 99.98% of success ratio when a consumer makes payment online, right? So that's about the payment platform performance, right? And then the third and most critical one is being compliant with regulatory guidelines and other compliance standards like PCI, DSS, and so on, right? Because regulatory compliance is imperative given the situation around us. I'm sure all of you are aware that all the payment aggregators and payment gateways are mandated to obtain license from RBI to operate in India. Right? So earlier the date was 30th June, and now they have extended the timeline to 30th September. So given this, being compliant with the regulatory guidelines is very, very important for us to have a uninterrupted service. Since PSPs are getting regulated, right? So RBI has come up with complete guidelines on overall business flow, which includes from collecting documents, KYC, onboarding, settlement, tech, the way how we handle the transactions, and we are mandated to be compliant with all these aspects, right? So to summarize, I think the three fundamental responsibilities that we can contribute to the ecosystem as a payment provider is to provide a stable and secure platform, a platform with high success ratio and regulatory compliance.
Great. So coming to Ganesh, Ganesh, you want to pitch in, right?
Sheikh, just a quick thought there. Whatever you outlined in terms of payment performance, uptime, and compliances, aren't these hygiene factors that you need to talk about when it comes to any payment service provider? When we are talking D2C brands specifically, I think there has to be a lot more to be offered. Like, for example, a payment experience of a one-click fast checkout, or something that gives delight to the consumer beyond the fact that payment is going through. Payment is going through was when Flipkart started, right? When you're on mobile, for example, some sort of intelligent filling up of all the required fields where you don't need to go through the entire pain of entering all the details every time you walk in, right? There is a lot more to be done in terms of experience beyond pure hygiene. Don't you think so?
No, absolutely, Ganesh, you're right. So I'm talking about a basic fundamental thing when it comes to convenience, right? As you rightly mentioned, not just single checkout, guest checkout options, right? And they're more flexible payments, right? When it comes to payments, the most important thing for any brand to have is acceptance of all available payment modes, right? So especially in a country like India, we have multiple, we ourselves as a company have 350 plus payment options available, right? And across the globe, I'm talking about across the globe. And in India, you have so many wallets, you have UPI, as I mentioned, buy now, pay later. So these are all very, very imperative when it comes to convenience, right? So what I touched upon is more to about a fundamental thing as a payment provider. As you mentioned, it's a hygiene that you need to maintain the platform performance. I completely agree with you.
Yeah. So coming to Utsav, what do you think? Are you happy with the state of payment gateways that we have currently? Are you happy with that? Or you think, just like Ganesh said, a lot needs to be done to create an experience for the consumers.
So I think me and Ganesh probably are the only ones on the panel who've had a different kind of a pain where we as D2C sale custodians, so to say, take for granted, and like Ganesh mentioned, hygiene, a lot of what Sheikh was kind of articulating. But I do agree with what Ganesh was saying to a large extent. The fact today is that the dynamics at play when you're trying to manage the conversion rates at the bottom of the funnel, and that's what we're all optimizing, right? As D2C business custodians, we're all so focused on maximizing the bottom of the funnel that we start kind of realizing the value that a seamless payment experience, and I would say it is an experience, makes to actually having a transaction or having a customer bounce off. So I agree completely that it's more about the experience today, and to a large extent, like Sheikh was concluding, that it's about having the plethora of options so you just don't miss out. Because today, and we are at Noise, we are one of those brands that has actually tested the buy now, pay later options. We've, at the end of the day, all of this tantamounts to a cost, and this is a cost that you kind of incur to have that transaction go through seamlessly, or actually get your conversion rates go higher, because there is a customer who's just itching to transact only if he had the payment to suit his needs. And I think at the outset, Navjot spoke that one of the larger trends that we see coming through this year for D2C commerce is going to be about personalizing the experience. It's about actually trying to deliver the experience for that user, for that consumer. And I think all of this kind of fits that narrative really. And I do agree that while solutions exist, there is trust deficit. There is lack of, for the lack of better word, low efficacy that we are experiencing. So there is a lot of this that needs to be streamlined. But I do hope, and I am pretty confident and optimistic, that this next 12 months to 18 months is a stretch where service providers would crack this piece. And at India, we would not be struggling with these issues that we're talking about today.
Right. Navjot, you want to come into this discussion? Any thoughts?
Yeah, so I think I mostly agree with what Utsav said. And in terms of payments, looking at it from a customer point of view and convenience point of view, of course, a customer who is buying online, and earlier there were a lot of trust issues which a lot of marketplaces, D2C companies for payments have solved. So the trust of a consumer transacting online is much higher than before. But right now, I think what we need to also solve for is, beyond trust, is convenience, right? A transaction should go through, and I should not be worrying about fraud. Is hygiene, and beyond that, what else can payment do for me? For example, in terms of buy now, pay later. And different categories, this is done very differently. Of course, we know the whole EMI route which we traditionally used to take. I think in digital e-commerce, when the value of the product is high, and it is being used over a long period of time, of course, like our cars, etc., and long-term assets, if we give people the convenience of paying not upfront but in fragments. And the example I took is of a car, but the example can actually be of another 5,000 rupee product as well, right? Where you're probably paying now, but you're consuming later or consuming over a period of time. So that is one convenience, that can be offered. And I think more and more the customer is also evolving, and the digital economy is expecting a little more out of payments these days.
Right. And Siddhant, you enable a lot of e-commerce companies to go online, So is this a pain point for them also, getting a secure payment provider, service provider, or are they happy? What is the situation which you have gone through or come across?
Yeah, so absolutely, like a lot of great thoughts on payments. Completely agree with what Sheikh said. Like the base is still those three things, on top of which all the experiences are built. I think the way merchants look at it is, and rightfully so, is that payments is a conversion tool. And there's always going to be a trade-off between, on one side, regulation, things like additional factor authorization that is there in India, and ensuring that customers are not at risk, right? So there's that whole trade-off, and I think in terms of like what Shopify does is like we have enabled as many options for our merchants, right? Like we want merchants to be able to pick and choose who's the payment partner that they want to work with, right? So there are a lot of them out there, and they're doing a fantastic job of innovating. I think in India, you see a lot of innovation happening, whether it's things like in India traditionally we saw that e-commerce was heavily cash on delivery. The you saw the marketplaces include card discounts and try to move a lot of that to prepaid. The pandemic helped, a lot of contactless payments kicked in, and from there now the next evolution is happening, right? A lot of things like buy now pay later. You're seeing EMI becoming increasingly popular. Wallets coming up with a lot of interesting rewards. So as a platform, it is imperative for us to enable these experiences, and we're definitely working towards that. But I think again, there's a trade-off at some point, right? Like where you're optimizing for conversion versus ensuring security, safety, and looking out for the customer's benefit as well. So.
And Sheikh said that the success rate of payment should be more than 99%. You said 99.8%. That is what we should try to achieve. I wanted to understand from Sheikh, what is the current industry standard, as in how many percentage of successful payments are going through, and also what are the challenges e-commerce companies, D2C e-commerce companies would be facing with the digital payments? Any views, Sheikh, on this?
Yeah, Varun. So to answer your first question, I think currently the market success ratio is about that range, right? 99.98, between 96 and 98, right? That's one of the important thing, as Ganesh was also mentioning, right? This is very, very important for us to ensure that at least 9 out of 10 transactions are going through successfully. And coming to the second part of the question, right? So let me take it like this. I'll kind of explain the challenges what D2C companies might face completely from a payment perspective, right? Uh, so I think there are three key challenges that we need to manage as a D2C company in terms of payments, purely payments, right? One is handling scale, basis the growth that we are seeing. So how do we handle the scale? And convenience part, which all of us touched upon, right? So how do we manage the convenience? And then the last and important one is trust. How do we manage the consumers' trust so that they start transacting more digitally, right? So talking about scale, as we all know, the overall India's digital ecosystem in last 12 months has seen the kind of growth that might have happened over a 3 to 4 year horizon, if not for the pandemic, right? So digital payment transactions are up by 76% in JFM 2021 compared to JFM 2020, right? So the Indian e-commerce market has experienced explosive growth since 2017, not just because of this recent pandemic, right? And this growth will have a direct impact on digital payment transactions. So if you see Worldline, our tech infrastructure has been built with the need for scale in mind, especially as we cater to large customers like Flipkart, Myntra, Big Basket, right? We have experienced and handled surge in transaction volumes during the Big Billion Day sale and other similar sales that happens across the brands, right? So we as a company understand the potential and scale of this growth in e-com segment, and we support our D2C partners with our next-gen payment gateway, which is secure and reliable for our partners to have a seamless experience, right? So Now, coming to convenience factor, right? So, a recent RBI survey on payment habits has revealed that more than 60% cited convenience as a factor for using digital payments, right? So, it's clearly convenience is driving e-commerce growth and influencing consumer decisions. And simply inconvenience simply causes cart abandonment, right? So from a payments perspective, we feel brands should therefore ensure that their online shopping experience is customer focused and they are offering the convenient options that customer want, right? As I mentioned to Ganesh, the single checkout page with guest checkout options and acceptance of all available payment modes, not just the traditional net banking and cards, right? So now we have zero cost EMI, cardless EMI, DC EMI, and so on, right? And buy now, pay later, which we touched upon. And again, subscription payments are also, picking up. There are a lot of people who are opting for subscription payments, right? So when a consumer comes to your platform, when they want to make this payment, which is the last step in the overall flow, they should have all the options, right? Not just that, in net banking also you have more than 46 banks, right? If a customer in a tier 2 or tier 3 city comes with a South Indian bank card or an Indian bank net banking option, and if that is not available, then it is a bad experience for the consumer, right? So acceptance of all available payment modes is one of the key convenience factor, right?
Sure. Okay.
And coming to the third point, right, which is the trust. So whatever is the digital transactions increase and growth in India, but cash is still king, right? While there is no accurate estimate of overall cash transactions, but considering the overall value of currency in circulation and the value of ATM withdrawals, right? A recent report says still above 60% in overall transactions are cash transactions, right? So while the reason for growth in digital transaction is convenience, but the reason for consumers not opting is lack of trust and the additional transaction charges that are there in a digital payment, right? So how do we address the trust deficit, right? So it requires involvement of all stakeholders, which includes government, brands, financial institutions, telecom operators, payment service providers like us. We must not only educate, but also invest in creating awareness of the usage, benefits, security aspect of the digital payments in the minds of consumers and merchants, right? So Worldline as a company, we've been actively investing to ensure our payment gateway is the most secured and reliable gateway in the country so that our merchants and their consumers have that trust, right? So we are a PCI DSS ISO certified organization with a dedicated global internal security team. Similarly, we strictly adhere to all guidelines from government, regulators, and RBI, covering all aspects from onboarding to transactions. Right? We have an in-house risk management tool which is integrated with our PG, which immediately flags the fraudulent transactions based on the predefined algorithm. Right? And our onboarding is completely paperless, so that our clients can quickly get onboarded and start transacting. So to summarize, I think the challenges from a payment perspective for D2C would be to handle the scale, convenience, and the trust factor is what I feel.
Okay. I'll come to Utsav. Utsav, we were looking to say something.
Yeah, I actually had a couple of observations that I wanted to bounce off the panel at large, but more specifically, Sheikh. I think what's important here is to consider the value of transaction and therefore how these dynamics end up changing. Because I think Ganesh had briefly touched right in the beginning that people are more price conscious / deal conscious during these times. You have to realize that as a consumer, I'm willing to make a second attempt or even the third one if my transaction goes for a failure, so long as I have a need for a product. When you're buying shoes or smartwatches or earwear, you've got 30 other options to pick from. And hence the bounce rate sometimes is so large, wherein just that one bad experience could trigger off a bounced off transaction. Wherein if I am, let's say, paying for milk or utilities or any of those things, I am happy making a second attempt. So some of those things, especially for the new age D2C brands that we are concertedly focusing on today, I think the impact is a lot more, and the success rate of the transaction is hygiene. And I think the fact that both of us use that word is because it's a taken for granted experience. The second bit is that whilst you mentioned that the reason to opt for cash or those who opt for an online transaction is convenience, and those who don't might be trust. I just feel that maybe we don't read the data sometimes, or we don't have attribution correctly kind of available for us. It could also be the lack of convenience for people who opt for a COD, or the lack of a payment convenience platform, so to say, and then they opt for a COD instead. I mean, the penetration that most of the D2C brands today that is in tier 2 and tier 3 cities, right? And for those cities, you suddenly realize that there are cards and there are banking issues, and there is aspects that we don't fathom sitting in a Delhi or a Bombay, and those are not necessarily trust issues as much as they are convenience issues that we don't kind of redress. And for brands and D2C players that are emerging, I mean, there are players at scale who figure it out, but there are others who are seeking that penetration, for whom this becomes a big, huge inhibitor, so to say. So
Right.
that's what I just wanted to bring to the table.
Sure. Anyone wants to come in, or we can move to the other point? So over the last year, 12, 15 months, I have spoken to a lot of D2C companies, and they have certainly become very big in these last couple of years. And one thing that stood out was, they said that pandemic has accelerated their growth. Earlier retailers were not giving them shelves in their stores, but now in the first wave of the pandemic, what happened was there was no supply from big players, and D2C companies came into rescue of these retailers. So there was kind of, a lot of trust building happened. Even consumers were looking for skin friendly products, or athleisure, anything. So wanted to understand from any one of you, do you think the pandemic has seriously accelerated the growth of D2C channel and companies at large? Anyone can take this question.
So, Varun, I think there are two parts to this question. One is a lot closer to home and more personal to Noise as a brand, where with sheer change in how people behaved, and really new need states emerging for people, things that we never could foresee happening. Where because you're sitting at home, suddenly you realize that you now need headphones that need to have a great calling experience, because you're on screen for as long. Suddenly headphones needed to have about 8 hours of battery, because wired were no longer cooler, and the other ones could only last about 4 hours. Suddenly people wanted to be spending time on gaming, and about 2 to 3 hours a day, and you needed devices that were low latency. So a lot of new use cases really mushroomed during this period. That for a business like Noise was in a way a blessing, and the offtake really was something that we noticed. But also during this period, you have to realize that from a conditioning standpoint, people actually started accepting that the big brand slash the small brand divide was no longer there. It was more about being able to service a need, and people were not being able to get their forecasts right. Just the sheer suddenness of how we went into a lockdown did not allow anybody to forecast their projections.
Mhm.
And as businesses, you are under that constant duress of clearing inventory to get your working capital to plan for the future. And now that we're all equipped to this new dynamic, we are savvier as business custodians, which wasn't the case back then.
I just want to add. I just want to add to that a little bit.
Yes, Siddhant.
So so we almost saw like 100% growth in the number of merchants on Shopify in 2020, right?
Mhm.
And that's testament to the fact that there are a couple so that there's definitely some things at play, right? Like one was definitely the lockdown and offline retail taking an absolute hit. Brands had to pivot quickly, merchants had to pivot quickly. A lot of use cases which were primarily offline in terms of, like, say, grocery, also came online, right? Like categories which would traditionally have not seen a lot of traction in the online space, right? So that was one part. The other part was also that what we saw was that versus even within the online, right? There's two options for a merchant, right? One, broad options. One is you do your marketplace route where you're selling through an Amazon, Flipkart, and the other is through your own website. And what we saw there was that a lot of calls that these platforms took really hammered a lot of brands out of business. Like, so there were no innovative solutions that brands could go after because they weren't in control of their own platform, right? So things like being able to accept gift cards during the pandemic, right? Or taking orders and very clearly communicating that you can deliver it later, right? Once the lockdown is lifted. Those basic things, a lot of brands realized, limited their flexibility. So everyone realized that, okay, we need our own direct-to-consumer route in addition to, say, a marketplace channel. And I feel that definitely having your own channel, being in touch with your consumer, building your brand over the long run will not only bring you higher margins as a brand, it will bring you more loyalty and more sustainability to your business, right? So I highly encourage most merchants to like, marketplace is an option. I feel like you should definitely, this is not an option. That's what I tell a lot of brands out there.
Awesome. Navjot, once you're done, I'll pitch in with my perspective as well. Go ahead.
Thanks, Ganesh. No, I think very interesting how Utsav and Siddhant laid it out, from a merchant and a back-end perspective and company perspective. I'm sure Ganesh would add, but I think the overarching theme that we saw also, adding on to what the two gentlemen said is, when you're direct to customer, you're able to listen to the customer more closely and you're able to adapt more closely. So it was very interesting actually to see that, some of our brands which were doing were able to even adapt during the pandemic to, going beyond Ayurveda foods to Ayurveda immunity, or, fashion, women's fashion, moving from women's workwear fashion, because workwear was, not really the hottest thing during the pandemic, to loungewear and work from home fashion. And the adaptability there for, that we've seen within our portfolio and even outside our portfolio of the way, the consumers have behaved. And, even the example that Utsav mentioned about the audio, battery life is of course very close to home for us as well. And the way people could adapt, the brands could adapt to that consumer need was the overarching takeaway that, D2C is here to stay, and, the quality that D2C can bring to consumer, use the consumer insight or add consumer value, it's really phenomenal.
So one thing I remember during one of these webinars last year, Kamal from Fireside said this. As a brand, you can look at it in two ways, right? This is a pandemic is probably the worst time to start a brand, worst time to be a brand, or the best time to be a brand, depending on how you look at it, right? If you're a traditional brand with significant retail distribution offline, you're suddenly looking at it saying there's a shock to the system. Inventory is locked everywhere, right? Customers are not coming to shops and buying, and you're bleeding working capital every day, right? So how do you manage your fixed cost there when there is no revenue? Look at it from our perspective, where we were a new brand. We just launched in November 2019, right? So while we were, one side we were thinking survival, people are not wearing shoes and stepping out, whether we should be a shoe brand at all. On the other side, when we looked at the opportunity side of things, it was very, clear. Everybody is on our turf, right? We understand e-commerce, we understand digital businesses. Even a Bata with its entire 3,000 store network is on our turf right now, trying to figure out how to sell online, right? So it's a very different world, and the odds are better for you right now than any other time in the past. Second, we started looking at our supply chain more closely as well, right? So the impact is not at the retail level; it's also on the supply chain level. The global supply chain was disrupted pretty badly, right? So we were looking at localization of a lot of our manufacturing in India, what we noticed was even the biggest suppliers, which were supplying to the world-class, European and American brands, suddenly had a shock to the system because all their orders were cancelled or put on hold, right? So they were willing to work with small brands like us, right? And we completely managed to accelerate our supply chain localization to 2 to 3 months time frame, right? Before Diwali, we started in July, and before Diwali, we had completely made India shoes that we could launch. So there are opportunities everywhere when you start to look closely, right? Third, just in terms of use cases, right? As Navjot rightly mentioned, uh, a simple pivot from saying we are all-day work sneakers. We said we are work appropriate. People are not going to work anymore, right? We launched a simple work from home kind of a lounger where you could slip it on and walk around the home or just quick grocery run kind of thing. We sold out 50% of the stock within the first 10 days of pre-orders. We didn't even launch and start shipping the shoes. So there is phenomenal opportunity out there if you find the right use case and the right insight to target.
Right. And Navjot, you have various D2C brands in your portfolio. Wanted to understand from you what makes for a good D2C brand according to you, and what would you think as in why does a D2C brand makes for a good investment opportunity as well? So your thoughts on that?
Varun, I think D2C is extremely exciting for multiple reasons. From the offline world to the online world, the whole DNA, the whole way of doing business, the whole scale that you can achieve is a lot more efficient, right? So, for example, in an online first D2C world, the time taken to get to 100 crore revenue in today's day versus back in the day is very different. So back in the day, it would take probably 15-20 years to get to, for a new company to get to 100 crore mark. And now, it takes 3, 4, 5 years to get and to, reach that mark. And we've seen that in many companies, like, 6 of our companies, in our portfolio itself have proven that model. And I'm sure there are so many more companies outside our portfolio in India who are doing that. And it's a very successful, proven way. And that boundary of 100 crore is actually just getting pushed day by day. It's actually been pushed way further now. So the ability to do that faster and with better capital efficiency, again, capital efficiency of 4, 5, you can create this. And that is extremely exciting. And for a investor, so for purely from an investment point of view, this is extremely interesting. And I think the reason why companies are able to also do it is, of course, they are talking to and listening to the customer directly. So the entire middleman is taken away. If a company wants to customize, they can do it faster. If they want to relaunch a product, the entire social listening is there. So what would happen is, earlier these companies would probably spend so much time and energy in maybe building out a sales fleet, and the DNA of a sales fleet was very different, right? There, the DNA of the type of people in your organization that you hire to do all of that, is your energy is going very differently versus a D2C company, where your energy is probably going not in sales fleet building but in customer audience listening, and listening to what the market wants. And so you can roll out things faster because you're closer. You can relaunch things faster. You can fail faster. And again, the next thing is, the way you can customize in D2C, you can't do it anywhere else. So that's extremely interesting, I think, from an investment point of view.
Right. And Siddhant, you would like to come into this?
Yeah, so I'll say I wanted to point out a few things. Definitely one thing that really caught my attention was what Navjot said, right? Capital efficiency. I think that's a big one when it comes to online direct consumer brands. We've seen brands bootstrap, and when they do raise funds, like, they use them very efficiently, right? So it works out best for both the investors and their growth. That's one thing. The other is, because direct to consumer fundamentally does not have too many middlemen, the business is by default like higher margins. So whatever growth you get more value at the end of the day, right? The third thing is, like, I think that I've seen is there is a lot of proven use cases also now where like brands have exited. A lot of the large retail houses have now started investing in direct to consumer brands, with the end goal of having not just a few brands solving a particular category, but having multiple brands reaching out to multiple sub-segment of customers, right? So, for example, Noise is a great example of a consumer electronics brand which has become big. Flatheads is a great example. Beardo got acquired by Marico, had an exit, I think, 2 years ago, right? So I feel like we're at the right time. The ecosystem has now started seeing both good infusion. I think 2020 was about $500 million in direct-to-consumer brands, and we're at the same time seeing a lot of good exits as well, right? So yeah, definitely great time to be a VC investing in D2C.
So one thing is clear with the discussion that we are having, that we are seeing a bright future for D2C brands, but wanted to understand from any one of you, once we start living in the normal world again, once things come back to normal, is this growth going to sustain that we have seen the accelerated growth during the pandemic years? Say 2022 or 2022 being a very normal year where everything opens up, people have started going out and they're living their normal lives. Will we be able to sustain this growth? What are your thoughts about it?
Just to kind of also comment on one of the discussions that you were having prior to this.
Yeah.
In terms of the VC's perspective, I think the holy grail of all of this eventually, of course, there are cost efficiencies, leaner structures, ability to scale exponentially, all of that. But I think the holy grail really is that this is fundamentally all for consumer, right? In the, let's say, conventional business models, the levels to reaching a consumer and being able to interact, engage, retain is so high that you don't really own the consumer. And in a D2C business, the ability to understand, own that customer, engage with them, and retain is so much more that I think every investment is worth a lot more than what it seems on the face of it. Because you could pivot, you could restructure, you could do all of that. You could tear the whole thing down and start with a fresher solution. But the fact that you are sitting on a gold mine of that consumer data and understanding and their love for the brand, that I think it trumps everything else. And to answer the growth bit, I think we've all had a mixed bag, so to say, in the pandemic. There are brands that have done well, and there are brands that have done exceptionally well. But there are brands who've not done well at all, and a lot of it has kind of tanked, gone south. So for us to be able to use this as a base year to extrapolate or draw any projections would be unfair. But let's face it, every year is a year for growth. More number of brands and hence more supply is likely to trigger higher growth, only because the fact is now the consumer has a lot more to pick from. That fundamentally from an economic standpoint is a good thing. The only thing that we all have to answer for ourselves is, will the economy see buoyancy and recovery back where we've all got enough disposable income to kind of start spending in the same fashion? So if we address the unemployment piece that we've all kind of witnessed this year, I think the growth is to stay.
I agree. I think I'd just like to add to what Utsav said is, if we build a good D2C company, there's a lot of data that we can play with. It's not just transaction data, it's behavior data. And that used well. Personally, I don't think we are in India, we are at a stage where we are using that well. But that, once we get to using that even better and better, that has a lot of power, like the way we can use data. And especially, I think the way D2C can use data, nobody else can. Like, your M1, M2, M3 repeats, your retentions, nobody else can use it that way, the way D2C can. And hence, smart targeting, right people, right place, right price. I don't think any other channel can do that. The right to win in these, right decisions of right place, right channel, right product, crowdsourcing, etc. Only D2C can do, and I'm sure others can do as well, but not as efficiently as D2C can do. I think the questions will be also around, once offline as a distribution channel opens up, will D2C be able to keep pace with the distribution? Will it have competition in offline as a channel, and maybe even delivery, right? Because I can pick up something, I can go down or pick up something versus I order, it takes 10 days to come. So I think those are the things D2C will have to be careful about. It's possible, it's doable. We just have to do it. I think some companies are doing it, some are not, and there's a opportunity to optimize there. So definitely possible to do that.
Anyone coming in?
I would definitely chime in on on the opportunity and the growth. I don't think we are going to go back to a time where e-commerce is a smaller percentage of overall retail. That is not going to happen. Siddhant, I hope 100%. I'm right.
Yeah, you have my money.
Definitely, as I mentioned, the step change has already happened, and I don't think people who have already experienced this are going to go back. The very small percentage, if at all, may go back, but people who were sitting on the fence on e-commerce have definitely shifted, right? And that is definitely a positive change in the favor of e-commerce going forward. The experience, of course, has to be made better. As Navjot mentioned, 10-day deliveries are not at all acceptable, right? You need to be as good as Amazon, if not beating Amazon at their game when it comes to consumer experience, especially as a D2C brand. And a lot of technology options and third-party options are available for you to make that happen as well. That's the beauty of what's happening today. Vis-a-vis what was there even 5 years ago, right? So it is just there for the taking. You just need to go and make that happen.
Right. And coming to Sheikh, Sheikh, considering that a number of companies are getting into the payment space, what do you think should be the core focus for these companies to have a sustainable growth?
I think whether it is a startup or an established player or somebody who's looking to get into payment space, planning to form a company, I think you should focus on 4 key pillars of payments, right? So the first one is platform performance, right? And second is the settlement process, overall settlement process. Third is reconciliation, and fourth key one is how do you manage refund. All right. So for any company, as I mentioned, if you want to have a sustainable growth and succeed in this space, you need to ensure you have people, process, and tech invested on these 4 key pillars for you to have a sustainable growth overall. I think those are the key things.
Sure. And now, since mostly all of us are technology-heavy companies, wanted to understand, have we accelerated the growth or the usage or implementation of technology in our processes in the wake of the pandemic, or say in the last 12 months or so, to create a better customer experience, which otherwise would have taken us a couple of years or 3-4 years of time?
Absolutely, Vaibhav. Like, we are a company that our aim is to make commerce better for everyone, everywhere, right? Like, I added the everywhere part. It's generally just everyone. And if you see, like, over the last 1 year, right, with our merchant base growing, not just in India, but across the world, the use cases that came up also evolved, right? Like, so we, over the last year, added a number of features which enabled things like, so if you were to see, gift cards was a big thing that came up during the pandemic, because a lot of people were not able to service orders, and businesses and the world in general has become more conscious about ensuring that the SMB ecosystem survives, right? So a lot of people just went and bought gift cards from a lot of small players, helping them survive the pandemic. Not just in India, I'm saying across the world, right? So that was one thing that happened. Then we enabled a lot of interesting use cases like local delivery, curbside pickup, tipping. And in addition to that, like, we've scaled further our payment products. We launched Shopify Capital last year in a lot of the North American / European countries. We're working towards it for India too. But those were some of the things that we've done, right, as a company. And I think that innovation has only fast forwarded. And I know that there are a lot of interesting things in the pipeline. We have this developers conference called Unite, which is going to be announced soon, hopefully. And so would encourage folks to join in there and be a part of the conversation if you're on the tech side. It generally happens in this month, so it's about to be announced.
Ganesh, on the technology front,
yeah, absolutely. Starting with the Shopify app stores, right? There are plethora of apps that we use on Shopify for multiple functionalities on the website itself in order to improve customer experience. We have started out with complete. So our core is marketing and design, right? As a D2C brand, product and marketing and brand building. The rest of the stuff is all managed, right? So whether you talk about warehousing, whether you talk about fulfillment, you talk about exchanges, returns, the entire logistics part of it, right? That is completely managed. So we use technology there. There are players like WhereIQ, Warehouse.io, who we work with. There are third-party logistics aggregators like the Pickers and the ShipRockets of the world, which we use in order to pick the best logistics player to deliver and at the right price, right? So there's a lot of that intelligence already there. Payment gateways, of course, Sheikh. There are multiple options there. UPI has become big. Intent flow is something that we are integrating right now to make that UPI experience itself more seamless. There is a lot going on payments experience and fast one-click checkouts and stuff like that. Right now, because we used to run a lot of road shows, right? So we used to do kiosks in workplaces and stuff like that where people could experience the shoes. But now that that's gone away, we are actually doing video demos on our website. Right? So you can actually schedule a video call, or if the agent is online, you can see the shoes and we can talk you through it. So there is a lot of innovation that is going on there in terms of technology, and working on it every day. There's more and more that keeps coming up every time you do something new. So yeah, there's a lot of exciting stuff going on.
Sure. And Navjot, in your portfolio companies, have you seen acceleration of technology, the implementation being accelerated over the course of last 12-15 months?
Absolutely. I think, very good amalgamation of what the two panelists said right now. One is technology, one is social technology, right? I think we just covered both. So when you talk about technology, I think almost every brand is D2C on the D2C front chasing and constantly recruiting these technologies, whether it is technology to pick the right delivery partner, or of course there is the back end, and there are the payments, which are the backbone, which is like one of the biggest. But then there are so many smaller e-commerce enablers which have come up, which just make you smarter, more efficient. There can be retention tools, there can be targeting tools, there can be social listening tools which tell you which product to create next, right? So I think there are so many e-commerce enablers which have come up now, and they are equally all of them are extremely helpful, very well being adopted and sampled by a lot of our portfolio companies. And then there is tech e-commerce enablers are more from a efficiency point of view, and then there's the social tech enablers, right?
Mm-hmm.
Which is more, it's not solving the problem of efficiency, it's solving the problem of creating trust or social proof or trust markers. So there are influencer platforms, or these micro bloggers or creators and platforms in social e-commerce, right? Where there is so much advocacy which is coming out of these platforms. For example, you can pay like a top Bollywood actor an amount, and that will give you that kind of a result. Maybe that result will be reach. But if you spend the same amount of money in micro influencers on these social commerce platforms and social these tech platforms with social enablement, be it for sampling, be it for social proof, be it for any kind of advocacy, I think that also tech enablement and that social proofing is also huge, which we are seeing like a lot of our companies are adopting. So I think both sides, I think I just touched upon it in the beginning also of, this is a key trend of how big these two big enablers, the tech part and the social tech part.
Sure. Sheikh, you wanted to come in, right?
Yes, Varun, thank you so much. I just wanted to add one point to what Ganesh said, right? So there is also this trend, right? So we are seeing a lot of brands opting for international payments, right? So cross-border payments. We have a product, cross-border payments, and as you know, Worldline as a group has about more than 40 years of experience globally in payment space. So we are available in 175 countries. So in last 6 to 8 months, there've been a good amount of increase in terms of brands going to international market than the domestic market, right? I just wanted to add to Ganesh's point. Thanks, Varun.
Sure. So we are running out of time. So I'll just take a quick view from all the panelists about the key learnings that they have seen over the course of last year, 12 to 15 months. What would be the key learnings for them for D2C businesses? We'll start with Utsav.
I think there are three large learnings, Varun, that we as an organization had. I think the first learning was openness. that we needed to be prepared for anything, because this just hit us like nobody knew. The second learning was agility and the ability to pivot, because you had to adapt. So you could call it adaptability, but that is something that really worked for us.
Mhm.
And the third learning was really agility and speed, wherein you realize that there are plans that you set, but sometimes you have to roll them out. And I'm going to use a quote that was once used by Iron Man, where sometimes you have to learn to fly before you can walk. And that's what we learned during this period, that you have to set yourself ambitious targets that you thought were never achievable, and you ended up witnessing those growths only because you set yourself that vision.
Sure. Coming to Ganesh, Ganesh, what would be the key learnings for you?
I think we covered the entire spectrum from survival to high growth in this 1 year, right? So be prepared for the worst and plan for the best is something that you have to do as entrepreneurs, right? There is a lot going on, and there is so much flux in the system that anything can happen. It's up to us to take the opportunity and run and make the best of what we can. That is one thing for sure. Second, I think just use of technology. There is so much available out there if you just have your eyes and ears to the ground. Picking the right technologies and using it with the most efficient way possible is something that we are learning. It's a learning in progress, but more and more adoption of that is starting to become something that every D2C brand is doing. So big learning there. We used to work in an e-commerce marketplace earlier, but the level of technology adoption is at a different level right now altogether, right? And the speed of integration itself is at a different level. And third, just adapting to consumer shifts, right? Consumer changes in behaviors and habits. Every time such a big disruption happens, there is a massive market that opens up, right? You look at what edtech is happening, what health and wellness is going through right now, right? There's a huge new market that opens up completely, right? So yeah, one big learning there is make sure that you understand what your consumer needs, right? As D2C brands, yeah, as Navjot mentioned, we are a little fortunate to understand that better. But yeah, we have to be on top of our game at all times. So that's the big learning there.
Sure. Coming to Navjot. Navjot, also, what do you expect from upcoming D2C brands? A couple of things that you think they should incorporate in their systems.
Sure. So I think one is definitely understanding what the customer wants, building for what the customer wants, and not the other way around. And by that, it's not just the product, but it's also the price. It's also the delivery time. For example, if the customer needs COD or not, if the customer has COD, but you're giving it after 10 days versus 2 days. I mean, there is going to be a big chance that if it's the COD payment and you're delivering after 10 days, that's not what the customer wants. It's probably going to get cancelled, right? So being very close to what the customer wants and solving for that, prioritizing that, that's one very important thing. And the second one is a big one, which is you're throwing money on platforms to acquire customers is not the holy grail. That's you have to do a lot more for customer acquisition. And so, and hence customer acquisition, customer retention strategies have to be very solid, strong. There has to be a path to profitability. It can't just be plowing money into social platforms to keep acquiring customers, which is more of a cash burning machine, but more creating content, community, creating a brand, so that that's more sustainable. So that would be the second one.
Sure. Coming to Siddhant, your key takeaways.
Yeah, so I think great learnings across. And I think from our perspective, I'll just say probably the two big things that we learned. We already sort of were aware of that and we were working towards it. But like the first one was, hey, the world is digital now. Whether you're going to work from home, whether it's about how you consume, and we basically fast forwarded by 10 years, right? So that was one big trend. And so as a company, we realized we need to accelerate that, not just for our merchants, but all stakeholders in the commerce ecosystem, right? Whether it's app developers, whether it's theme developers, whether it's Shopify partners that we work with. The second was for us to become very close to our merchants, and the paradigm shifts that are happening in terms of how like businesses are evolving, innovation is happening. It's all accelerated, right? Like what used to happen in say 10 years ago is now happening in 2 years. So realizing that, being close to our merchants and innovating on all fronts, right? Whether it's improving our existing product functionality, whether it was enabling the app ecosystem further, or enabling even the developer ecosystem that helps merchants work on Shopify, right? So we've made a bunch of investments on that front in the last 1 year, and I think we will continue to do that. Shopify, as I always say, is a great platform to just start selling online. You can start selling in 2 hours. I've done it myself. So I highly recommend folks to go ahead and do a free trial, even if you're not ready with what you want to sell, right? So yeah, that's my
So I'll take Sheikh's views before we wrap up the discussion. So
Yeah.
Sheikh, yeah.
Varun, from a payments perspective, our key learnings are one, speed is the essence of the game, right? So in terms of integration, right? You need to integrate. You need to allow the merchants to integrate your platform quickly, and the time taken to onboard and start transacting, right? When a brand comes to us, they should be able to get onboarded immediately and then starts transacting in a day, right? So that's the thing that we are working on. And when I talk about integrations, we need to make it very simple for them, like how I spoke about the multiple payment options for customers. Similarly, we need to have multiple plugins and different types of integration kits for our brands to come onboarded, right? So that's why we kind of get listed in platforms like Shopify and others, where brands can go and quickly find out about our kids and then get integrated and start transacting. So these are all the key learnings from a payments perspective.
Sure. So thank you very much, all of you, for such an insightful discussion. I hope all of you have enjoyed this discussion. Thank you very much.